Have you ever done something so stupid that you just couldn't forgive yourself? Well, I can definitely say that I have. This is a story about how I made $500,000 trading stocks and cryptocurrency and lost nearly all my gains.
I am never gonna financially recover from this.
Later in this video, I'll also share with you 5 expensive lessons that I learned about money from this experience. And for real though, these are extremely expensive lessons. They literally cost me $500,000 to learn, so please learn from my mistakes so that you don't have to repeat them. So my rags to riches, back to rags story starts back in 2015 here in the land of maple syrup and hockey, Canada. Now back in 2015, Canada was going through the election season where our country would elect its future Prime Minister, Justin Trudeau.
We have recently switched to drinking water bottles out of when we have water bottles out of a plastic, away from plastic towards paper, like drink box water bottles sort of things.
Justin Trudeau had many policies that I thought were absolute trash and still do, but one policy seemed like it could provide some lucrative opportunities. Namely the policy to legalize cannabis recreationally. To make light of a bad situation, I decided I would take his cannabis legalization proposal at face value.
It's a bold strategy, Cotton. Let's see if it pays off for him.
I began extensively researching all the public Canadian companies that were in the marijuana space. And I came to the conclusion that one company in particular seemed to be a market leader with a ton of potential for growth. This company was Canopy Growth Corp. And little did I know at the time, they would end up becoming the largest recreational marijuana company in the world by 2018, according to their market cap at the time. I quickly invested $5,000 into the stock in late 2015, and a few weeks later I invested another $25,000 when I saw how well the stock was starting to perform, and the true potential of the opportunity really started to percolate in my mind. So in total, I had invested $30,000 of my hard-earned cash into one single stock, which was a little under half my net worth at the time. How's that for diversification? Pretty quickly, my $30,000 became $45,000, then $60,000. Yay, I doubled my money. And then I was hitting 100,000 plus. And I remember it climbed up to about 140,000 before a massive retracement in the stock price brought my initial investment back down to about $45,000. And I remember thinking, how dumb could I be to not sell at that price before? I had more than quadrupled my initial investment, and yet it didn't seem like enough. Meanwhile, my trading account stumbled along around $45,000 for what seemed like months on end. Every day, I would wake up and refresh my stock watchlist app and check the price to see if it went up. And when I saw that it didn't yet, I would mentally bitch slap myself for having been blinded by, let's face it, greed.
Keep my wife's name out your fucking mouth!
By this time, I had also started selling some of my Canopy Growth Corp shares to buy other penny stocks in the marijuana sector, hoping that I would find some diamond in the rough. And I did manage to make some good money here and there off of some up-and-coming penny stocks, and Canopy Growth Corp started to actually start picking back up. By the time I knew it, I was back up past my $140,000 peak and seemingly flying up more and more month after month. At the same time, I had also started investing income from my day job into different cryptocurrencies. I was buying a couple $100 worth of Bitcoin, Ethereum, Litecoin every single week, and I also started dabbling in the dark arts a bit there, aka shitcoins, with some really great returns. By the end of 2017, my stock and crypto portfolio totaled nearly $500,000. Now, $500,000 is objectively a large sum of money. And at the time in British Columbia, where I live, it could have bought me an entire 5-bedroom house in cash nearly. But I kept thinking, why would I sell my shares now? If I can turn $30,000 into $500,000, I can just keep repeating this process and turn, say, $500,000 into like 5 million and just keep going, rinse and repeat. Now the problem is that this is just a psychological game of moving the goalposts of what you consider success or enough. Now, all of a sudden, $500,000 didn't seem like a lot of money to me. I had my sights on, at minimum, doubling that, and I really believed that I could, like without question. I've never been one to try to keep up with the Joneses, but I do believe that it's human nature to compare our status or our situation to our peers around us to gauge where we stand. Now, this is definitely a bug, not a feature when it comes to the human psyche, as there's almost always going to be someone that's more successful than you. Now, I began to think that $500,000 may be a lot to most 25-year-olds, but there's people out there with multiple millions by this age, and I wanted to be in that category. If they could do it, so could I. So in one last Hail Mary attempt at becoming a multimillionaire, I decided to raise my middle finger to the sky and say, fuck it, to risk management, selling nearly all my shares in multiple companies and funneling all the proceeds into one single penny stock, like an absolute goon.
What are you, stupid?
And I truly believed to my core that this was gonna be the rocket ship that would launch my degenerate ass out of the land of brokies and into the universe of Bugattis and mansions and financial freedom. But the stock ebbed and flowed for a couple weeks and then just started to plummet. Now, one of my strengths during my investing journey here was my ability to keep a calm level of equanimity when things weren't going my way. I remember vividly when my account dropped $45,000 in one day, which didn't even faze me, as I truly believed I'd be making it back if I persisted long enough. My strength had now become my weakness. Over the next 6 months, I calmly watched my capital waste away day after day. And next thing I knew, my account had withered hundreds of thousands of dollars, and I was left with a fraction of the capital that I once had. I had officially fumbled the bag. Cue 6 months of depression and years of ruminating on what could have been. Now, I should have prefaced everything here by saying that I do see this now as an overall net positive experience. You know, I'm proud that I took a risk. I'm proud that I accurately predicted an outsized opportunity, selected the company that would become the cannabis market leader by 2018, and experienced something that most people never will, which is making large sums of money very quickly and losing the majority of it. I was still able to come out profitably after those 2+ years of investing, but nowhere near where I was at the peak of 2017 and 2018. The lessons that I've learned from this experience have helped me understand my own psychology and have allowed me to keep my monkey mind in check for all my investments since, although I'm not perfect and have certainly made more mistakes since then. So what did I learn? Expensive lesson number 1, never invest without a plan. You need to have a clear exit strategy before you invest in any asset. You gotta ask yourself, why am I investing in this? What evidence do you have to support your hypothesis? You should have also analyzed the investment and have a contingency plan in place if the investment doesn't go the direction that you thought it was going to go. You also need to know when you need to cut your losses. You don't need to remain a bag holder, locking your capital up in a shitty investment. Don't become a slave to your investments. For stocks, you can set up stop-loss triggers to sell if the price drops drastically, or to sell the stock if it rises and hits a target price that you've set and predicted. Don't feel bad if the stock continues to climb up past the price you sold it at. If you're profitable, that's really all that matters. Gains left on the table sucks, but losing your principal capital because you held on too long and it dropped too quick sucks way more. Expensive lesson number 2, don't lose sight on the value of $1. During this whole ordeal, I completely lost touch with the value of $1. And I've always been somebody who was thrifty and good with money, and something that was constantly ingrained in me and my brothers by our parents since we were kids. But during this period, I felt my sense of $1's worth start to wane. And I believe something happens to your psychology when you come into a large amount of money at such an accelerated rate. I'd started to become accustomed to large amounts of money with wild fluctuations, which changed my perspective on the value of not just $1, but on thousands of dollars. Suddenly, a gain of $20,000 in a day didn't seem all that significant. It didn't do anything for me. I always wanted more. And the more money I made, the more insignificant $1 seemed. And this started to wreak havoc on my mind and caused me to take greater and greater risks in order to earn what I felt was a meaningful return. As long as you're not going backwards, you're doing great. Let those dollars stack up and compound over time, rather than rushing to earn as much as you can as fast as possible, which is just gonna expose yourself to to unnecessary risk. The story of the tortoise and the hare comes to mind here. Expensive lesson number 3, overconfidence. During this period, I was making money on nearly every single trade I made, which for a young, naive 25-year-old made me start to think that I was the next Warren Buffett. And while I was getting better and better at reading the market and learning the minute intricacies about trading stocks, I really just wasn't as good as my portfolio would have convinced myself or even others around me that saw my gains. The truth is that you could have bought just about any cannabis stock early on in 2016 and you would have made an extremely solid return just from being an early adopter. In fact, if I had just kept my original shares in Canopy Growth Corp without any day trading whatsoever and just sold them at the top in 2018, my shares would have been approximately $925,000. And all the stressing and trading was really for naught. I could have just chilled for a couple years and walked away with nearly a cool mill. There's a phenomenon known as the Dunning-Kruger effect, which is described as a cognitive bias in which people with limited competence in a particular domain overestimate their abilities. This can definitely happen when you have a bout of luck early on with trading. I'd simply overestimated my capabilities to predict market movements and my ability to select companies with lots of potential. Expensive lesson number 4, recognize when you're gambling. It took me a while to recognize and admit that I had stopped behaving like an investor and I started behaving like a gambler. If you're saying things like, I have a good feeling about this, or if you're trying to recoup losses quickly on a new trade, or trying to force a trade when there's not a logical setup, these are all the mentality of a gambler. You need to slow down before buying a stock and ask yourself what your plan is. Why are you buying this stock? And are you investing a responsible amount of money and not just putting all your eggs in one basket as if it was just a game of roulette over a sloppy weekend in Las Vegas in 2014. Now you're not allowed within 100 yards of a Chuck E. Cheese. Expensive lesson number 5, plan ahead for taxes. Will you have to pay taxes on your capital gains? If you're in Canada, unless you're trading with a tax-free savings account, aka a TFSA, you will have to pay taxes on your capital gains when you sell a security. In the US, the TFSA equivalent would be a Roth IRA. This is extremely important to keep in mind before investing so that you aren't blindsided by the CRA or IRS or any of these other alphabet organizations that want to take your money. You'll also have to be prepared each year around tax time if you've bought and sold any shares to provide your trading details to your accountant. Now, I wasn't 100% sure of how this worked when I first started out, which led up to a very confusing and expensive tax year that I was not fully prepared for. So do yourself a favor and plan ahead for your taxes, or better yet, just invest using a tax-free vehicle if possible. Using these 5 lessons I've laid out here, I'm confident that you'll be able to safeguard yourself from some of the psychological factors that might plague you while investing in the markets. Now, they are all easier said than done, so please be careful out there and invest wisely. That's all for the video today, folks. Best of luck in your investment journeys, and please subscribe to the channel for more unsolicited advice.